This is Pat Walker, Mission Winners. I'm making a training coaching video for everybody. One of the programs I use that I really like is called MarketSmith. One of the great foundations they have here is a section called the 10-day moving average of new highs and new lows, and the 10-day moving average of up volume and down volume. And I'm looking at them right now, and I have to share this with you. And this is very important. We know what the market's doing. The S&P 500 has been sloppy. The NASDAQ has been sloppy. The price action on many stocks has been sloppy with a fairly heavy downside bias. We're not bears, we're not bulls, but what's something we do at Mission Winners that really helps us is look at the daily market indicators. I'm looking at the daily market indicators on the NASDAQ, and this is quite intriguing. I just want to show this to you. On QLD, right here, you can see there's a downward bias. But on the NASDAQ, and I'll do it with this too. On the NASDAQ, you've got a lows here, but this is what's important. Even though the market's been dropping here, as you can see, and this is a daily chart, as the NASDAQ has been dropping, very important thing has happened. Just recently, the 10-day moving average of up volume is over down volume. Even though the market's pushed back here, up volume leads down volume by a very small market, but it leads, and that's very important. I'll take it a step further. 10-day moving average of new highs and new lows, even though the market has been falling right here, the 10-day moving average of, are you ready? The 10-day moving average of new lows is steadily dropping. Again, even though the market's falling, the new lows are dropping. New highs are basically stable. But it's a very, very important variable on the NASDAQ to take into consideration. What's it telling us? The market's dropped here, but the internals are improving a little bit. Not a lot, but a little bit. Now we're going to go to the S&P 500. This is the chart of the S&P 500. And I'll just share this with you. We're going to look at the daily market indicators. And here they are. And this is very important. The market is going sideways. Do you agree? It's not really rallying up, and it's not really rallying forward. But this is the important variable. Even though it's going sideways, the 10-day moving average of down volume is dropping, and the 10-day moving average of up volume is steadily picking up the last couple of weeks. I'll say it again. The market's kind of just going sideways, but up volume has been picking up. I'm not being the eternal bull, but I'm just pointing out that even though the market is sideways, up volume's hanging in there and down volume's dropped off a little bit. Another very important variable. Even though the market's gone sideways through here, the 10-day moving average of new lows is dropping. 52-week new lows is steadily dropping. 52-week new highs is steadily picking up. Now, I must stress, new lows, 10-day moving average of new lows leads new highs, okay? I'm not trying to say, oh man, everything's great and we're taking off like a rocket. But what I am saying is, at this point in time, the 10-day moving average of new lows, even though the market's been sloppier, has been pulling back a bit. In this little stretch right here, the 10-day moving average of new lows has been dropping, and the 10-day moving average of new highs has picked up. That's good to see. Now, the important question is this. Will it continue? We don't know. We're coming into a seasonally strong period, the end of the year. I'm not saying we're going to go up. I'm not saying we're going to go down. But just looking at the charts and looking at the moving averages of the 10-day moving average new highs and new lows on both indices, there is small underlying strength. Not large, small. Could it improve? Yes. Could it deteriorate? Yes. But at this moment, the internals have improved just a little bit. Not a lot, just a little bit. We are coming into the seasonally strong period at the end of the year. Will it lift this year? I don't know. I don't forecast. Don't need to. Price and volume tell us everything. Here's the spiders going sideways. There's real distribution in here. This is a daily chart, by the way, okay? Rallied up on okay volume, but not real power. right here, up volume's less than down volume. Rallies right back up. What does it tell us? There's resistance right there over that line. This is the daily chart. Here's the weekly chart. And this is why we look at dailies and weeklies. Serious selling volume here, serious selling volume here. The internals aren't that bad, but what do we need to see? We need to start seeing, again, this is a weekly chart. I'll enlarge this for you. We need to start seeing up volume really picking up. The internals improved a little bit, but we need to see some power lift on the S&P 500. Until that happens, please be careful. Now let's take it a step further and look at the Qs. Here's the Qs. These are a good measurement of the market. And we'll go to the daily chart first. Let's do apples to apples just like we did with the spiders. Daily. I'll refresh this to make sure that everything is good. Volume and price is correct. You can see it rallied up and then it fell on some heavy volume. And then it lifted, but not on a lot of volume here, not a lot of big green volume bars. Down volume bar, up volume bar, but less up volume, down volume bar and heavier volume, down volume bar. This is the daily chart. As you can see, there's distribution in this. What has that done for us at Mission Winners? Well, we're not buying a lot right now. We're managing what we have. That's it. And do we have a lot? No, we don't. No, we don't. We have very low exposure. What we do have, we have good gains in. And so that's good. So there's the Qs on a daily chart. Let's take it a step further and look at the weekly. Here we go. And I'll refresh this to make sure it's right. And again, I love looking at the dailies and the weeklies, price and volume. And you can see it lifted up and volume was just okay. Increasing selling volume right here. See that? That's a negative. Increasing selling volume right here, negative. Up on less volume than it sold on. And then this past week, down on heavier volume than it went up on. So we have some cross currents here. We combine that with the market action of the stocks until we start to turn and see price and volume improvement on leading stocks. What do we have to do? And it's simple. We maintain composure and we practice good control. On the NASDAQ, the 10-day moving average right here, this is the QQQ, which is a great proxy. We can use the NASDAQ here too. On the NASDAQ, the 10-day moving average of new lows is dropping off. New highs, though, has not picked up yet. I'm not saying this to confuse you. I'm just pointing it out. Here's the daily chart. Here we go. Just pointing out. We'll have to watch this and see what happens. Are we prepared? We're always prepared. We're coming into the end of the year. Historically, we get a good lift. Will we this year? I don't know the future, but we will be prepared.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.